Good morning. This week is a very high-risk event week, as we will see the EU starting to make the final preparation for the payout to Greece after this weekend's agreement on austerity, although it will still be very volatile. We expect the Greece situation to go away, but they run out of money on Friday, and that could have some negative impact on the euro short term. Overall, the concept and the macro themes we play right now is the better looking data out of China versus the fiscal cliff in the US. We think the fiscal cliff is the main event, as of course when we saw China collapse in growth, it didn't really have any material impact on the asset classes around the world. Why should it have it on the other way? So fiscal cliff remains the key issue to discuss this week, and it looks like that there will be a lot of rhetoric but very little action in terms of getting closer to a deal. We think this will go all the way to the wire, meaning end of the year, before they actually decide anything, because everyone have a interest in doing nothing right now. So playing the role on the unwilling remains the main objective of both the GOP party and the Democrats. So expect some little bit more nervousness. Where will that lead the euro dollar? Well, we think that we'll have a test around 125, 120.5, 25.5 if this nervousness is the main theme of the week, combined with the Greece situation, of course the unsettled Spanish situation as well on top of this. So at a lower test of 125.50, Monday, Tuesday, maybe a little bit of a rebound. 128, 128.20 remains the high end of that range. But we think, and as we've said for a long time, we think medium term, short term, long term, every term, we think the dollar is a buy here. It simply has a bigger capital market. Through that, it has a bigger capital cake. It means it has access to credit. They are more flexible. They see reshoring. They are increasingly substituting very expensive crude and coal production of electricity into natural gas, which is trading at 10-year low. So all in all, we think there is support in the growth part of the US economy, with some event risk of the fiscal cliff in the short term. Market seems to believe that will be resolved, and if it is resolved, it will mean a stronger dollar ultimately, and even in the short term. Have a great week.